This is the FM Gold channel of All India Radio. In the program News Analysis, we now bring you a discussion on Financial Resolution and Deposit Insurance Bill. The participants are Dr. P. Pulla Rao, economist, and Arjun J. Chaudhary, journalist.
The Financial Resolution and Deposit Insurance Bill. The objective of the bill is how to secure the savings deposits of those who have accounts with banks, so that if the bank, a future point in time, undergoes bank failure, the deposits are not at risk. And the role of insurance companies to ensure that they have sufficient funding in order to compensate the deposit holder so that their deposits are not at risk. Dr. Pulla Rao, how important is the bill?
Basically, Financial Resolution and Deposit Insurance Bill is part of the whole series of changes in the financial arena that government is bringing. For many, many decades, there is a change about our economics, about the new kind of demands for financial products, entire change of the banking sector. Therefore, we need new regulatory measures to safeguard, as you have just said, deposits, but also to set up the resolution corporation so that this entire sector, basically public sector banks, you know what to do if they go bad, if they go sick. As of now, we don't have any such law. Therefore, you can't leave it to courts to chart out a path with laws which are not relevant to the public sector banks for resolution of sometimes when they are undergoing serious losses. What do? So this is to fill that gap. And don't forget, we already have the bankruptcy code, other laws which have come about, stock exchange have been modernized, everything. So this is part of that gap which has to be filled. You have to have laws to address a potential situation where a bank may have difficulties and even fail. But remember, it has not happened in recent times in India. So there is no cause to worry that banks are going to fail and this is a measure to address it. It is just part of law which is necessary so that you are covering every potential aspect pitfall.
In other words, you are insured, and when it comes to consumer protection, those who have accounts with banks, whether it's public sector banks or private sector banks, there is always a risk of the banks not having sufficient funding at any point in time for a variety of reasons, not being able to honor the deposits maintained by the accounts holder. When you talk about modernization, the key question really is enforceability of the law. If any consumer or any customer of a bank is faced with this difficulty, they will be able to redress this problem with an institution that is being set up under the Financial Resolution and Deposit Insurance Bill, which is subsequently going to be passed into law.
Right now, deposits are insured up to 1 lakh. Even in the future, after this bill comes into force, it will still be 1 lakh. Where the worry was that there is something called the call-in section of this bill, whereby if a bank goes sick, even the deposits will be available to make it strong again. That has caused worry, which the finance minister has addressed that this never happens, is not going to happen, but it's just there even earlier. On the contrary, now what we are going to do is, if a bank does fall sick, we'll have speedy clearance of everything going around so that depositors are not penalized unduly, they are not left in limbo. So therefore, consumers have as much protection today as I had yesterday. And these concerns which the finance minister has said will all be addressed by the parliamentary panel, which is going to give us a report on the last day of the next budget session in 2018. So this is a work in progress. There's nothing final yet. All the stakeholders will be consulted. All the fears will be addressed. And definitely it will be some kind of consensual law. Government does not seek to push a law which will be just what its views are. So I think as time proceeds over the next 60 days, all these concerns, especially for consumers, will be addressed.
Arun Jaitley, the Union Minister for Finance, had addressed this in Parliament yesterday, and he will continue to address this in Parliament to ensure that there is no panic amongst the account holders who may, for reasons unknown, feel insecure about their deposits maintained by the banks. So in a way, the central government is only strengthening the financial and the insurance mechanism for the benefit of the electorate.
Absolutely. And the other thing is, we in India have a fixation with fixed deposits. Our stock market is not well developed. More money is on fixed deposits than is going to the stock market. All modern countries find capital in the stock markets. And we want startups. Who is going to fund the startups? Who is going to fund expansion? In all other developed countries, it's the stock market. A company's brand raises money. So if our consumers in India slowly move to the stock market, new financial products, it will enhance the economy and there will be some risk taken, but it's covered. So therefore, I personally feel that this fixation that we have in deposits should go slowly. If we are to catch up with modern countries, find funds for our industry, commerce very easily. If you have a good idea today, you go to the bank. But if you have a good idea in, say, a Western country, you go to the stock market and you float your shares and you get money for that. Therefore, we have to have change. And this part of the change with security and safety. Indians their needs will be addressed, as the finance minister has said. And so far, there has been no cause for concern. Though he said, many a time people get anxious, but there's no cause for that.
But in spite of your opinion on this matter, there is always a concern amongst the electorate that they require money for a rainy day, and in the absence of a fully developed social security system which extends health benefits, for instance, to everyone, not just to government servants, which is already taken into account under their service terms and conditions, but for everyone. So till that is able to be fully developed, I'm sure there are concerns among citizens that, all right, we will save a substantial part of our disposable income and the other part we will invest in the stock market.
We have the RBI for that. Reserve Bank of India has been carefully monitoring all our banks, including the public sector banks. It's a very conservative institution and has been very careful in seeing that banks always have liquidity.
But that has been the case now since the new government has taken over, and that's been the endeavor of the central government under Prime Minister Narendra Modi. But before that, the banks were sanctioning loans without cause, and that has led to the NPA situation as well.
Well, now that the NPA situation has been aired so much, definitely banks are cautious. RBI has put in new tripwires to ensure that some rogue elements don't give bad loans which are not properly assessed. So all those protective measures are coming into force. There's great awareness. But on the other hand, banks also must be given leeway so that they fund industry and other things. It is not just motor vehicle finance or consumer goods finance, fridges and air conditioners, which private sector banks are doing. We need bank loans for bigger things, for infrastructure, for industries, for small and medium scale industries, which depend on banks for low interest loans. So therefore, government has to find a middle path, that banks should be encouraged to give loans, but carefully give loans so that this situation of NPAs doesn't arise, thereby creating an unhealthy economy and fear psychosis in the economy.
If we can learn something historically, for instance, if we tap into the history of the US market, the capital market had developed quite exponentially if you look at the pre-Great Depression era, and then the stock market went bust after the boom that followed before, and then the banks also faced a great deal of difficulty with banking failures, panic amongst the account holders, and that's when you had the Federal Reserve being set up and strengthened. We're also talking about deposit insurance there, so that there should be an appetite of risk, while there should also be provisions for safety of account holders who are setting away money for a rainy day.
One of the things that you referred to, the Great Depression in the US, has brought about also at the same time that liquidity in the economy is very important. That depression doesn't come only because of bad loans. Depression in the economy comes when there is less cash. So there is a need to remember the lessons learned from the Great American Depression, which went on for 10 years and ruined the country, that you must also have continuous availability of money, free flow of money in the economy, that an inflation of 0.1% or 2% is not bad, rather than a deflation. That lesson is very important. I think that's why the government is bringing along reforms in all the financial structures, or what it is calling the renovation measures which are being undertaken right now in the Indian economy in all financial spheres, so that they go compatibly forward. You can't have modernization in the stock exchange and not in the banking sector. All must be modernized so that they are in lockstep with each other to go forward. Keeping in view the lesson you have just mentioned, a very important lesson at which Keynes has advanced, that liquidity and viable banking sector is very important for the economy.
Absolutely. And speaking about renovation and the financial sector, it includes insurance companies. and the liquidity of the insurance company is as important as the liquidity or the capital adequacy of the banking sector. Now, what is being done about insurance companies to ensure that they are able to compensate when the need arises?
Our insurance companies also are as conservative as any other financial sector companies. They are not taking big risk. All their investments are in blue chip companies or in government securities. They are not giving money to startups. They are not going into various high-paying, interest-paying things.
Or venture capital.
They're very conservative. You and others perhaps think about us, how conservative we should be if we are to advance. Where is that fine balance between risk-taking and conservative bookkeeping? That's something in that golden mean. We have to go on that so that we go forward. You can't complain for lack of funds for industry when the banks are overflowing with fixed deposits and interest rates have come down. Because this is the only product which Indians are going for. Government has to protect this product, fixed deposits, with banks, but how to make the financial markets more viable and lively.
Tell us about the institution that is maintaining the deposit insurance for the benefit of consumers who have accounts with banks.
Yeah, government is there to guarantee really all public sector banks. Government has not thus far allowed a public sector bank or even minor banks, even cooperative banks, to fail and depositors facing very serious situations. Government and RBI, in fact, are the real backbone of our insurance, because it's their confidence which is keep.
What about the General Insurance Corporation?
They give you up to 1 lakh rupees, which is not much. It is just saying we are insuring your deposits, but it's only 1 lakh. Most people these days have much more, even smaller middle-class families, they have much more. Their savings may be 5 lakhs, 10 lakhs, but only 1 lakh is insured. I would like to say that we shouldn't give too much emphasis to this 1 lakh. Rather than that, what is the health of the banks so that you don't even have to think of insurance? Are the banks being run in a very modern way? Is there enough threat of punishment if they stray, they invest badly, they give bad loans knowingly, and do other things which they should not, which we have seen on the West happen in 2008. We must have such a sector and not give too much emphasis that you have 1 lakh is assured. When you have 50 lakhs, you still get only 1 lakh, but that shouldn't happen. That's why government has not denationalized public sector banks, because government knows that the Indian sentiment is that it's a government bank. It won't fail, it won't allow it to be failed. That's why nobody is panicky on any account. There are no run-ins on banks in India. Even if a bank with all this huge non-performing assets in other countries, you would have had a very severe possibility of run-ins on banks. There's nothing like that here. That confidence should continue, but that confidence must be deserved by good management of banks and the adequate punishment of banks stray away from the correct path.
That means corruptive influence on the board of directors sanctioning loans to undeserving candidates. Those regulations are being put in place.
They are in place. They must be enforced. They must be watched. Banks, unlike other institutions, you can't have a mistake undetected, because that mistake will have a price. It has to be constantly monitored and rectified straight away. There is no time lag between a mistake made and the punishment which has to be given or the monitoring done. It's all in real time. Therefore, we must have a very viable, very robust system of monitoring of banks, yet give enough freedom to the bank managers to do their job.
So we are looking at the central bank here, the Reserve Bank of India, also who seek aid and assistance in technical matters from the Basel Committee on the capital adequacy for banks. Could you tell us something about the committee and the recommendations which is being adopted by the Government of India?
See, we want to keep in lockstep with the rest of the world. The rest of the world was following Basel recommendations. That's why we are going for higher capital. Thanks. That's one of the reasons NPAs have to come down. Otherwise, government might as well say, let the NPAs there, we'll pay the interest. Why worry about reducing the NPAs? Because we want to keep up with international standards so that we get international recognition. Because we are getting a lot of foreign capital into the country. Foreign direct investment. You can't have one kind of banking laws here and standards here, rating agencies which only cater to Indian style, Indian standards. So to keep up with Europe, America, rest of the world, Far East, Japan, China, Korea, which are far advanced of us, we need big banks, but banks which have the same standards as European banks.
Thank you so much, Dr. P. Pulla Rao.
You were listening to a discussion on Financial Resolution and Deposit Insurance Bill. The participants were Dr. P. Pulla Rao, economist, and Arjun J. Chaudhary, journalist. This program was produced and presented by the News Services Division of All India Radio. This program is also available on our website, newsonair.nic.in. You may email your opinion about this program at airnsdtalks@gmail.com.